Multifamily Mindset
Podcast. Think bigger.
Welcome back to another episode of the Multifamily Mindset Podcast. I'm your host, Zach Rucker, co-founder of Black Cedar Investments and coach here at the Multifamily Mindset. For those just joining us, welcome aboard. We're thrilled to have you join our growing community. Here at the Multifamily Mindset Podcast, we deliver fresh content twice a week, keeping you engaged and inspired. Every Tuesday, we dive into insightful interviews with students from the MFM network, showcasing their journeys and lessons learned. Then on Thursdays, our mindset mentor, my friend, Dallas Pruitt, unpacks the powerful mindset principles gleaned from these student stories. And that's not all. Wednesdays are reserved for another fantastic podcast, Own the Outcome, hosted by Tyler Deveraux, the visionary founder and CEO of the Multifamily Mindset. Tyler sits down with high-level individuals, exploring their path to success and extracting invaluable wisdom along the way. So whether you're here for the wealth of knowledge, the inspiring stories, or the expert insights, you're in the right place. Welcome to the Multifamily Mindset Podcast. Let's dive in. I'm excited to introduce our guest today because he is not only an MFM student, but he has become a leader within the MFM community and is a networking master. We have Lenny Bendo on today from Great Dane Capital. Lenny, thank you for joining us and our listeners today.
Oh, thank you for having me, Zach. It's pretty exciting. I haven't done too many podcasts yet in my tenure with MFM, so I'm happy to be here with you.
That's awesome. I'm glad you're here. I know the listeners are going to take away a lot because we've had some great conversations, and I just love seeing the impact you have on the community with just your short time being here. I mean, I might consider you a veteran MFM student because you've been with us for going on almost 2 years now, right?
Yeah, it's I think it was at 21 months, and if we want to nail it down to the day, today is day 613.
Oh wow, you got the date. Love that.
Yeah, I journal every day, which is one of the recommendations. Starting with MFM, which is something that I don't necessarily do in my real life, is what I'll call it. But I started doing it as soon as I wanted to track how I've been doing, all of the challenges that we may have encountered, and the successes. So you want to celebrate those, and being able to say, hey, on day 482, we finally closed on our first one. So that was, that 482 doesn't really mean anything to anybody else, but for us, it's like, yeah, that was the day we finally were able to close on our big property.
That's awesome. I love that. I love that you've taken that, something that you've learned and dove into that. I want to touch on that a little bit later, but let's give the listeners, like, who is Lenny?
Sure.
Why multifamily? Tell us about you, what you did before multifamily, and you jumped in, and your company, Great Dane Capital.
Yeah, so I have more of a corporate background with 3 Fortune 200 companies within the US. So the first company that I worked for was the Pillsbury Company. Started out in sales and marketing, ended up going into brand management, managing the Green Giant and Hungry Jack brands. And I think most people are familiar with those brands. After 10 years there, I was basically stolen away by Johnson & Johnson to work on their vision care line, working in category management, which is basically analytics and statistics and trending, market research. So that added to a little bit of a skill set that I thought was pretty important and transferable to multifamily real estate investing. I was with them for 2 years, working with Walmart, Target, Costco, and all of the big eyeglass retailers, because I was part of their vision care line, which is the AccuView brand of contact lenses. And then from there, I was stolen away again by the Heinz Company. The official name back then was H.J. Heinz. And so I started there in account management, calling on the biggest retailer in the Southeast, which is Publix. And so if you're in Florida or the Southeast, you'd be familiar with that brand. And they are as big as Safeway is nationally, Kroger is nationally, and not quite as big as Walmart. However, in Florida, Publix is still the market leader, even with the entry of Walmart into the state. I started there, but then ended up asking to do a special assignment in India. So I'm an international business major, and this would have been the first assignment that I've had that actually was international. And to be truthful, uh, that wasn't one of the countries that was on my radar to work in internationally. But Chad uh, really encouraged me and pushed me to take the assignment because it would be my foot in the door, especially if I had a lot of success there. I ended up making them $1 million in the first quarter of that year, which set them up for an incredible trajectory. I was then asked to do what I did in India with all of the emerging markets. And so that uh, comprised typically the emerging markets comprise Brazil, Russia, India, and China. But this assignment was all of Asia Pacific, Middle East, Africa, Eastern Europe, and Latin America. So it's a lot bigger than just the 4 countries. I ended up going to about 48 countries, I think it was, during that assignment, just because I was learning a lot of their systems, their retail trends, etc. And then I got asked, because I knew all of those countries, I got asked to do a global systems implementation, which would basically be taking the 23 operating systems globally and meshing them all into one.
So putting all this systems together and creating
Correct.
that. Wow, that's awesome. That's a great history. Just what you've been able to do, analytics, market research, systems. I mean, that's huge.
Yeah.
And I'm sure that's a big, skill sets that have kind of translated over. So at what point within that did you come across multifamily, and that popped up and you're like, yeah, I want to do this? Because you're working for these large companies, doing global business. Where did multifamily come into play?
Yeah, sure. So I actually ended up wrapping my career with Hines as Chief Diversity and Inclusion Officer. But the company, Hines, got bought by a joint venture between Warren Buffett's Berkshire Hathaway and 3G Capital. And in that interim, there became a time where they offered up a potential package to any employees that might be interested. And I took a look at it, and it seemed like it was a very healthy one. And I was actually quite familiar with what 3G Capital had done with Burger King, with Anheuser-Busch, with Geico, and it wasn't really favorable in terms of, the corporate culture, which went from basically having a work-life balance focused on family to one that was pretty cutthroat, and that's not really my thing. If any of you know me, which many in the network now do, I'm all about helping people, and that new corporate culture that I foresaw coming did not fit my DNA. It was not something I wanted to be part of, and so you know, uh, I in essence retired at a fairly young age, and I cannot draw on any of my. So I have 3 pensions. I can't draw on any of them for a while, and so in the meantime, multifamily came into the scope, and now this is what I'm doing until I can officially retire.
Wow. Okay. Okay. And so since you retired, right? Then I'm guessing you're just figuring out what was next. What are you going to do next?
Yeah.
I'm sure someone as you, in your roles and what you did, you needed something to do. With being the analytics, market research, I know yours probably just going crazy, being retired. You got to do something. So, was that what kind of you stumbled on multifamily? How did that, or were you doing any single family, real estate investing before? Or was it you just stumbled upon multifamily?
Yeah. So we did have a second single family home that we were utilizing either for rentals, short term or longer term. We did try doing the shorter term with Airbnb. That ended up being a challenge when the county started cracking down on Airbnbs within Orange County. Uh, being based in Orlando, with the tourist parks being the big draw, and hotels uh, having a big portion of the tourism tax that is charged. Uh, it ended up being no longer cost effective for me to do that, or for us to do that. And so we sold that property off. So that was our first foray into single family outside of our primary home. And so we were actually taking a look at buying a couple properties on the Big Island in Hawaii. So we had, it was on, I can't remember, like 6 acres or something like that. It had two homes. One of the homes was this, basic uh, Hawaiian mansion, I would say. And then the other one was like an in-law home or apartment. But on the second level, it was an entertainment venue. It was basically, an entertainment hall with a lanai going all the way across and it's screened in. I'm like, God, that would be a great wedding venue all in one. So you could have your wedding there and your honeymoon. So we were planning on having it an all-inclusive thing built up there. Uh, but it was in a more remote part of the Big Island. And so I'm a little bit more of a social person. I need to be able to do something outside of just outdoorsy stuff by ourselves. And so we were also taking a look at buying a 9 unit on the main island, which is Oahu, where Honolulu is. Uh, when we started doing that, Tyler started showing up in our feed, and Chad said, "Hey, do you want to check this out?" And I'm like, sure. I mean, it'll kind of help us understand what we're getting into with the other one. And then it ended up being, it's like, oh, this is scalable. This can be non-recourse, as many of our MFM students would know. If you're over 20 units, it's like, okay, well, the 9 units really doesn't cut it then, even though that's what we could afford. But then, with the opportunity to utilize pooling of investor money in order to syndicate, that ended up being a big draw to us. And how big do we need to go, and how many doors do we need to have under our management in order for us to be um, financially free, I think is the word that
Yeah.
most people use. And
Okay.
so uh, we were the first ones to sign up at our 3 day.
That's awesome. That's awesome. So you kind of just fell into this path of real estate, and then as you went on, okay, there's Tyler. He pops up, you join, and it was just you guys were already heading that route, and then it just helped open your minds to think bigger, right?
Absolutely.
Which is our like slogan there is think bigger, right? So I want to transition from there. Is you guys jumped in, you joined, you started journaling, so you have what we mentioned earlier. You're journaling now. You're up to 613 days, and so tell me what has been the biggest impact of joining this network, and then I want to dive into your first deal at day 428 or 58.
Or 82.
82, 482. And
Yep,
then we'll dive into that because, I mean, that's a journey, right? So,
for sure.
how has multifamily impacted you, or this multifamily mindset impacted you guys in your journey? And you've been in it over 600 days now. what does that look like, right? So let's start first with how has it impacted you?
Yeah. So the MFM network and the staff of MFM have been very important in our journey. In our journey, I apologize for getting a little choked up because Chad and I really did go through a lot of shit, and I don't know if you need to beep that out, but it was, when people say, life's going to throw you obstacles, they definitely threw us many obstacles to quit, to not do this. And so the support that we got from the people, especially in our, from our 3-day workshop, we are still in, we are still good friends with all the ones that we ended up bonding. So the support from them during some of the toughest parts of our lives, not just our MFM journey or our real estate journey. Just to give you a small snapshot, uh, in the beginning, right before our fast track, like the week of our fast track, we actually had to fly back home from Florida or fly back to Northern California because his mom had suffered a stroke, Chad's mom, and so this was during Hurricane Ian, which is like we needed to get back, otherwise we were going to be stuck there. So we came back, basically had to put her on hospice because she couldn't speak, swallow, and therefore, she would need to be intubated in order to get her nutrition outside of IV, which is the last option. And we know she wouldn't
Yeah.
want that. So that ended up being the option. On the way home here from the hospital, after putting her on hospice, we were in a major car accident.
Wow.
So we were on an off ramp in stop traffic, and a girl driving an SUV was doing something other than paying attention and driving, hit us at 70 miles per hour.
Oh my gosh.
She didn't
Wow.
brake. She didn't see. The only reason why her car was stopped is because ours was in front of it. And so that was a major accident for more for Chad than for me. I didn't see it coming. I didn't brace for it, so I wasn't tensed up. I did have whiplash, but Chad had some significant damage. And so it was to his hip, to his knee, to his ankle, yeah, and to his shoulder. And so that ended up being like a major thing. And that was on a Tuesday. And on the Friday was when our fast track was supposed to start. Uh, One of the challenges, and I'll relate this back to the network, one of the challenges we had after we were in the accident, we were both basically put in an ambulance to the emergency room, and we did not have a way to get home. And some of our classmates from our 3-day offered to drive 45 minutes to come pick us up and take
Wow.
us home.
Wow.
And so for us,
People have you just met over 3 days.
yep, yeah, we just the thought or the offer to do that was pretty impactful for us. And then they were really the only ones we knew or that knew going into the fast track that Friday what had happened to us, because we didn't like come in crutches. I was supposed to be wearing a neck brace, but as soon as we got to the the hotel venue, I took it off, and because I didn't want a pity party.
Yeah.
I didn't want it focused on me. I wanted it focused in on what we were trying to get accomplished at the fast track. And the only time I put it back on was when we were on the bus, and it was doing this to the neck, and I'm like, that wasn't. But I was. We didn't really give anybody an indication, and so when people actually started connecting with us and seeing what had actually happened that week, they were shocked. They had no idea that we had gone through that much. And then after the fast track on Friday, we spent a couple hours with Chad's mom, uh, went home late, woke up early the next morning, did our fast track, went back to visit with his mom right after that. And she passed away that night.
Wow.
And so it was a little bit like she waited for us to be done with that so she wouldn't interfere or that we wouldn't miss it. And the support that we got from Tyler, our coaches, the people in the Maui office, and it was incredible. Really was.
Wow.
So the network isn't just another group of students. We have seen what other networks are like, and we're not as impressed. We are we it is a different vibe, a different aura, a different mindset than others that we've seen. And so if you have not found your tribe within MFM, then you're not trying. Or there there is so much support and an abundance mindset, and people helping each other. Um, we were very lucky in the beginning of our journey that we got attention from Tyler and from Ryan and from Jackson and several Kimberly, that were well known within the system. And we wanted to make sure we pass that along because Tyler can't do that for everybody. Right. And so the fact that he was able to spend that time with us in Hawaii uh, and really whiteboard our first 6 months meant a lot to us. And it was important that we pass that along to others. And
Yeah.
and you should find, if you're a newer student, that there are many of us now. It's not, you know,
Yeah.
it there are several within the network that you can lean on,
Yeah.
whether they're in it for the long term or they're active or not active. There's always somebody that's willing to help.
Yeah.
And I love that about MFM.
First, Lenny, thank you for sharing that to not just me, but to our listeners and that experience. Because that's a lot. That's a lot to go through. But I love the the outlook you have from that and the experience you had in terms of meeting people with similar core values and
Mm-hmm.
aligning that way. And I think that's the big focus. And Tyler's done really well at this of creating this company and this environment that aligns with core values to be able to support people. Really the think bigger is it's thinking bigger, not just from a multifamily real estate aspect, but it's really a growth aspect and an abundance aspect and a helping others succeed. And that's what's so amazing about this network. And I'm
For sure.
grateful that you're able to experience that and do that and then be able to give back. And that's why I did want to go to that point of like you have become that person for the network to help give back as well for your time being in here and that experience. So yeah, thank you for sharing that. And yeah, it's a powerful thing joining a network that aligns with your core values. I stress that a
Right.
lot with people. Yeah, a big piece with partnerships with people is find people that align your core values.
Yeah.
Business isn't just transactional, it is very much a partnership that you need to align yourself with people. And it's so cool to see you guys come in here and be able to align yourself and other people do that to then wanting to help
Yes.
and keep pushing that.
Yeah. I will be upfront with all of the listeners, all of the newer students. I'm like, this business is not easy. The the scenario that they provided during the 3-day workshop is like, I would say, best case scenario. Getting on a deal quickly and being able to, get on your first deal, et cetera. That it's harder than that. especially during the downturn of 2023 and all of the impact that the interest rates, et cetera, and the insurance going through the roof. Everything that was happening is kind of like a perfect storm, technically, for failure of all the students that we have coming through. And
Yeah.
so our hope and our goal was to make sure um, that our fellow students were sticking with it with us, and we were fine and happy if you were able to close on something quicker than us.
Yeah.
We had absolutely no issue, and we celebrated everybody else's wins in the meantime. And I challenged all of them to show everybody else how to do the same.
Yeah. Well, I love that. I love that you're cheering other people on for their success, even while you're going through your own, right? You're trying to do this as well. But like you said, trials happen, challenges come, they hit us. We all experience things differently through this journey. Our timelines are different. We can't compare ourselves to others because we have our own criteria, we have our own timeline on things in our journey. So, what, besides the network piece, but like what helped you guys and has helped you guys continue this journey? Because a lot of people would have dropped off by now. The challenges that have hit them, that has hit you guys, a lot of people who kind of fall off and they don't come back, they don't re-engage. But you guys are here, and not only here, but you're present and you're active and you're continuing to support other people through your own trials. So what's kept you here? And then let's dive into that deal, your first deal. Like I want to know about that. And I want our listeners
Yeah,
just to
sure.
hear like your first deal and how do you guys get through and push through the walls to get to that first deal?
Yeah, so a, a little bit is my background and being able to take challenges, learn from them, and be better on the next thing. A lot of it was the mindset and the support of the group, and little tips that we've been given. And one of the biggest statements that I'll share, and I thought was pretty impactful, is things are meant to happen at the time that they happen for you, not to you, but for you. And so we've taken every challenge that we've had and every error that might have been made or every failure and took that as a learning moment or a teaching moment. And so that I'll just kind of go through what we went through with the San Antonio property that we finally closed on. So I'll say that we got on that deal in January of 2023 at the beginning of the year, right? And I in essence, was able to qualify and get on the team right away. And it had to go through a process of making sure we got enough capital. We ended up getting enough capital, and what ended up happening is because it is an opportunity zone property with a tax abatement, it had to go through a HUD process. And so that takes anywhere from 4 to 6 months.
Yeah.
And like I would say in June, we found out that our major partner, JP Morgan, had to pull out in order to buy First Republic. And so while we did have 3 backup family offices ready to jump on the deal, the process started all over with HUD. So first we
Wow.
had to choose and this was June, July, right? So
Wow.
we'd
Already
already
six
been on
months.
it five
Yeah.
months, and
Yeah. Wow.
some properties take, you know, 3 months to close,
Yeah.
and that's technically a long one, right? So, uh, the process started all over. We ended up choosing the one that gave us the best terms. So, it was actually because there were 3 different entities bidding to be the partner. We were able to choose the one that offered us the best terms, which were actually better than the terms that we got with JP Morgan, because they were the lion's share of the capital. So they were the big partner. They, had the largest slice of the GP. And the family office that we ended up choosing ended up being uh, offering us, more to the rest of the GPs.
Wow, that's
So
awesome.
yeah, so it ended up
What,
taking another 4 to 6 months.
okay. Yeah, I was about to ask. So
Um,
when did you end up closing on it?
December 22nd
December. Okay. So from January to
to
December.
December. And we
Wow.
actually did not, we were worried it was not going to close in 2023 and that we're going to miss getting on stage at Peak this year,
Yeah.
right? Because when we found out, it was the Friday before Christmas
Wow.
at like 5 p.m. And so I'm like, oh my God, this couldn't have come at a better time, because I frankly didn't believe it was going to happen in between Christmas and New Year's, therefore not happening in 2023. And so, yeah. But because, I'll back up a little. Because we were on the deal already as far back as January, we were able to say, okay, I don't need to do much more work on this one. We did end up doing more, but I didn't have to, right? Or we didn't have to. So we started working on other deals, and students, because we were on a deal that was so big, started bringing us other big deals. And so we ended up working on several, this one was 327. We ended
Wow.
up putting in an LOI in April on a 682 unit in Tulsa.
Oh, wow.
Um,
That
and our
that's a big
deal,
property.
it was a solid deal. We had a sponsor that could handle the size of the deal. We had a family office that wanted to do all of the capital. So it was like, well, if they accept our LOI, then that it's not going to be a problem, because we actually, on a property that big, and I may suggest this for anybody that's taking a look at anything 200 units and above, we did a pre-LOI walkthrough. So a mini due diligence, if you will, because if you're going to have that big of a property, you got to know the major things that you may encounter
Yeah.
as a GP team. And if you are not walking that property yourself, or have somebody trusted that you can have walked through that property, I think you're making a mistake, because if and when you find anything during the due diligence after your LOIs and best and final has been accepted, you're going to have to retrade, and that's a lot harder to do than
Yes.
point out this is why our offer is what it is.
Yeah. I
Yeah,
mean, it's a lot harder for sure. And at
yeah,
that point is uh, you definitely need to do your due diligence before you even do due diligence, right? You need to do
right,
that research before you submit an LOI, because that one's on you at the end of the day
yeah,
if it
absolutely.
doesn't happen, right?
And and I'll share this. The reason why there's multiple facets of due diligence. The reason why you need to do this is because the brokers are not full disclosure. In fact, we found some of them fabricate, whatever. I'm not throwing all of them under the bus, but they don't have to tell you the truth. That is up to you to discover during your due diligence. It's not like single family, where you get a disclosure of everything that's happened within the house, and if you're lying about it, you're committing fraud, and you're liable after the fact. The broker's not, and the broker's goal is to get as much money, as high of a purchase price, because that's what they're reliant upon for their commission.
Yeah.
So you have to know what the market rents are. You have to know the comps. You have to know which companies are bringing jobs or population to the area. And
So what you're saying for our listeners is there's work involved, right?
oh, there's a
There's
lot of
work
work.
involved
It's not
beforehand.
simple like, hey, we just do underwriting. Well, yes, that is the case, but all of the numbers that go into your underwriting need to be as tight knit and close to reality as possible. So if you're not securing an actual quote from an insurance agent or an interest rate from a lending broker, and you're not validating, the potential market rent increases, then you're doing yourself and your team a disservice.
Yep. Yeah. You
That
should have
part
a
is
long
incredibly,
checklist. Yeah. You should
yeah.
have a long
There's
checklist
a
of items.
whole lot, but
Yep.
one of the things and one of the things I love about my partnership with Chad is we have completely different skill sets, right? I'm more analytical. I'm big on the market research, strategic planning, the branding. He's actually really great at spotting any, um, I'll call them pattern deficits, or like there's something wrong with this. We need to figure out what this is. He's great at knowing how much contracting and the timing that it's going to be. So, for him, his skill set lends very well to due diligence and asset management. And so therefore that's his expertise. And I'll take care of the social media for the most part and the market research, et cetera.
Yeah. Okay. I love that. And thank you for bringing that up. And we haven't necessarily talked a whole lot about Chad in this, because I know we're going to bring him on in another episode to get his side of
Yeah.
of your story. But highlighting, partnerships and skill sets. I mean, that's super important to identify that and be able to tackle things quicker, because you guys understand each other's strengths and you guys can go in your lane and work efficiently for sure.
Yeah. Yeah.
Awesome.
The last thing I would say to students, the last thing you want to do is team up with somebody that does exactly what you do. And you mesh with them because you're very similar, but that's not going to help you with the other facets of this business that you need to take care of. And we realized I was going to be the underwriter of the team. I'm really great at numbers. I just don't want to do it every day. And so, our goal is to find somebody that loves underwriting,
Yeah.
as part of our team.
Well, listeners, if you heard that, if you didn't hear that, rewind that. Lenny and Chad are looking for an underwriter,
A
to,
great
a
underwriter
great
that loves it,
underwriter. Yes, that loves
not
it.
dabbles in it, or that can do it. We want somebody that loves it and is great at it. They
And
see the things we see. They're as conservative as we are. They're they're leaning into factual numbers versus theoretical.
yeah,
So
I love
yeah,
that. And to highlight kind of what we talked about is core values align, right? You gotta be someone that you align with.
absolutely.
And this network is so great for that, because there are so many people that do align, um, that join this network. Now, this network
Yeah,
isn't for everybody, but those that do jump on board, the trend seems to be it's because of the values and
right.
the core values of it, and the type of community that we have here. And not, the MFM team is great. And then people that we bring in from the community, the students, are even better. So it's an awesome community to be a part of for sure. So I
Yeah.
want to switch up with a couple more questions, then I want to dive into our think bigger questions. So
Okay.
networking, what does what is networking for you? I mean, I see you everywhere. You're on all these networking calls. How has that impacted your business? What can you give to our listeners why they should be getting out there talking to people? For myself, an introvert, sometimes it's hard for me to get out there and to get to events and to talk to people. How how do you do that? How do you manage that? And just what are some tips and tricks?
Yeah, for sure. What I'll share with the network or with fellow students is this is actually something that you have to do. So if you're an introvert and it's outside of your comfort zone, you have to do what you can to break out of that comfort zone. I let me sh- I'll share. You asked about who Lenny is. I forgot to back up. I shared my success corporate wise, but I got to tell you, I was a 99-pound geek in high school with bad acne, straight A's, bottle glasses, and I wasn't a jock. I was 99 pounds. I was a skinny little runt. I was short, and then my family, I would say, um, while technically they were at least upper middle class or solid middle class. Because we're going to private school, we were considered poor, which again, poor geek that, you know, screws up the curve in class is not the popular guy. So I was actually bullied, and that was a rough part for me. But I learned from it, and there were several organizations that really kind of turned me around in terms of breaking me out of my shell, being able to talk to people, working on a team, standing in front of an audience and giving speeches or doing debates. Um, that's that is a learned. So if you think, oh, Lenny's just an extrovert, no, I didn't start that way. I had to become one. I had to learn to. I had to practice, and so it is key. And part of the reason that I say it's very much key, and Chad does understand this, is that this is a business of relationships.
Yes.
It
100%.
is a people business. I will tell you that investors will invest with people they know, like, and trust. And
If you don't open your mouth, they
if you,
won't know
yeah,
you.
if, and
Yep.
and again, we did something different than some folks in the network did. Is we were big on social media, letting people know what we were doing, but we were not going after any of our friends, family, or current network of people that we know, even professionally, in terms of, hey, do you want to invest in this? Because what we didn't want to do is have them, Chad's in he's in a different industry. I came from a corporate industry, which has no real estate background. What do they know about real estate? That that's not, why would I do that? And so we did not want anybody in our family or our friends network to think we were selling them Amway or some other multi-level marketing gig. And I said, Chad and I both agreed, hey, if they're interested in investing or knowing how we bought a 327 unit, $75 million complex, then we will have that conversation with them. And some have, right? But
Yeah.
at this point, we are going after uh, folks that are accredited, that we're meeting. And you have to, when I say those are the people that we are tending to go after, it's like you have to put yourselves in situations where you will encounter, or you have a higher likelihood of encountering them.
Yeah.
So an airport lounge when you're flying or traveling is a great place where you're likely to run into somebody that is accredited,
Yeah.
right?
Which
Because
is crazy
typically,
because our previous episode we had Cooper and Michael on, and Cooper said the same thing. He was at a hotel, had a layover, or not a hotel, sorry, an airport, had a layover, went to the lounge, went to the bar, and just started having conversations with people, and was able to make connections with potential investors.
yeah,
So that's funny that you bring that up. 2 episodes in a row, we have that same thing, is be in places where there are high network investors, or high net worth individuals that can be investors into your deals, build those relationships. But bring that back around. Super important that you said is social media and being consistent on that. A lot of people don't like social media, but
I
it
don't.
is me neither. I don't like it either. However, it is it is how we communicate in this day and age and
Mhm.
be able to get in front of people, and it does have an impact. I've seen the impact on my business from that, and being able to just
Right.
be consistent is probably the toughest part, is being consistent with it and continue to
Sure.
do it day in and day out, and be consistent with that, because then it does build that community and that audience. So thank you for bringing that part up.
Yeah. I'd like to add a tip that follows along both the networking and social media part of it. And I actually, was questioned why I posted so much from a different organization that I do volunteer work. I'm actually on the board of directors for my fraternity, which is 300,000 members. nationwide. And I post more than the balance of the board of directors does on social media. And it kind of helped me within this business. And here's the reason why it is so important to do that is you are going to meet, let's just even say it's dozens of people. I say you're going to meet hundreds of people throughout your, however long you're going to be doing this. It's kind of important for you to know if you're building connections with any of these folks, you have to be able to build the connections. And frankly, if I don't even remember your name, I'm not going to be able to build a connection with you. So connecting with folks on Instagram, LinkedIn, or Facebook is pretty key, because then you have a little bit of insight as to what that person is going through in their life outside multifamily or even within multifamily. So it's important for you to be able to reach out and say, happy birthday, congratulations on the wedding or the engagement, or your son graduating, or you getting a puppy,
Yeah.
or you closing on your first deal, or actually even the the tougher part is, I'm so sorry to hear about your loss, or you went into the hospital, how are you doing now?
Yeah.
All of that makes a difference when you're trying to build these relationships. And I will tell you that almost every single one of our investors would rather invest in a B minus level deal. So if the deal's okay, it doesn't really meet all of their metrics, but they like me or Chad or both of us or the team, and they would rather invest in that deal versus an A plus deal with phenomenal numbers, phenomenal potential, phenomenal returns, et cetera, et cetera. But that guy's a jerk,
Yeah.
an a-hole. They're they're not going to invest with that
For
guy.
sure.
That's not the way this works.
Yeah, they're going
And
to invest with
so,
people they know, like, and trust. And some people will say, if the numbers are great, investors will come. No, it's the relationship you build first, and
yeah,
then they'll come to the deal based on your relationship there, for sure. So
yeah,
I do want to pivot here and go into our think bigger questions.
great.
So first off, how do you choose to think bigger?
So for me, there's multiple facets of this, and I'll try and run through them quickly. One is just with regard to multifamily. I think we targeted within our 10 years 2,100 doors because we anticipated that being the number we needed in order to get 1 million in revenue per year of passive income. So, as you try and calculate where you want to be, how you're going to leave your W-2, that's something you got to keep in mind. In terms of thinking bigger, you need to think bigger in your network. So I would say if you know a handful of people, less than 100, whatever that number is, you're going to have to think bigger in order for you to scale up your business, whether that's having a deal flow because of your network, or having investors, or having teammates that you can work with. You got to think bigger that way. And then the biggest one, I would say, is personal growth. You have to think bigger than you were. The person that Chad and I are today individually are better than the persons that started this journey 21 months ago. Completely different in great ways. We have learned a lot, but you also have to think yourselves at a point that you aspire to be. So you want to be that person that's able to give 1 million to a charity. You want to be that, so successful that you're able to make improvements within the community that you bought this apartment complex in, or that you can teach others to do this,
Yeah.
or can take, there's a lot of aspirations that you should have. And this this network has really provided that thinking bigger kind of aspiration in terms of personal growth.
Awesome.
It's fantastic.
No, love that. So second question, how do you define success?
So for me, success is a little bit attaining of goals that we had hoped we would make and learning from them. Because even if you didn't attain the goals, um, the learning process that you go through in order to get there, I consider that a success. Uh, Getting to the 2,100 doors, that would be a success for me. But that is just a stepping stone in what I want to do. We want to be financially free. We want to have our own time back. We want to be able to travel without worrying about X, Y, and Z, whether that's cost, time, etc. That those are, everybody's success is different, or
Yep.
definition of success is different. And the one quote I share with all of the people that I mentor in the student organizations that I work with, it is like, look, I would rather you aim high and miss versus aim low and hit. And that has stuck with so many of my students. It's like, look, if I didn't aim for the sky, I would never have gotten to where I am today. If I had aimed at this mediocre goal or this mediocre growth, then sure, I got there, but it's not going to give you the satisfaction of the journey that you get by aiming high.
Yeah. No, I love that. That's a great quote to give to people, and it is so true for sure. So last question, what is the best advice you can give to new multifamily students, investors?
There's a lot, so reach out to me if you want a little bit more expanded version of this. But I would say for the majority of students is the networking. I would say you have to be able to network and be able to do so outside of MFM. No offense to MFM, we learned very quickly that we had, in order to find, our sponsors, in order to find deals, in order to find investors that are accredited, uh, you're more likely to do it in other areas outside of just doing the MFM networking call that we do once a month or once a
Yep.
month.
Yep.
Yeah, so that's one. And networking, again, in the rooms where you have a higher likelihood of running into accredited investors or high net worth individuals, that's going to be key to your business. Because if you personally, as a GP, whether you're the underwriter, the deal acquisitions, or the asset manager, if you're also able to bring some investors with you, then you're more likely to close on deals, be successful, execute on them. So
Yeah.
that would be my main one.
Yeah. I love that. Those are all great. Those are all great. So takeaways from today and talking with you has been networking is huge. Surround yourself in an environment with like-minded individuals as well to have a support system. So with that, there's a support system, create a support system. On top of that, network with as many people as you can, network with people that are high net worth individuals, other people outside of different events, right?
Yeah,
And third is persevere. There's going to be challenges.
absolutely.
There's going to be roadblocks that come and hit, but being a part of this community and taking the lessons that we learned from Dallas, from Tyler, is there are challenges, but it's a learning. How can you learn from that and move forward? And you guys you've done so well at that. And hopefully the listeners were able to take away some of those key pieces that I know I have, and can implement that and implement those three pieces that I pointed out there. With that, Lenny, has been awesome. I really enjoyed talking with you today. We've included your social media, your links in the show notes. So if listeners, if you want to get a hold of Lenny, check the show notes. His links are there. Connect with him. He has a lot more wisdom to share with you guys, things that we didn't even scratch on: journaling, more mindset principles, more details about his deals. Connect with him to learn more about Lenny and his journey. And I know he'll impact you in your journey. So Lenny, thank you for jumping on. Really
Thank you,
appreciate
Zach.
it.
Appreciate you.
Multifamily Mindset Podcast. Think big.